Good day, guys. How you guys doing? Trust you guys had a wonderful day today. I'm really sorry for not dropping videos lately. Um, I got a lot of stuff to do it, so that's aside. Let's dive into business. The last video I dropped, I told you guys we're going to be diving into forest fully. That's talking about structures, like blah blah, blah, like tied into forest fully, because what we've been talking about is actually tools you needed for the trading. So, and I said the next video is going to be major business, like we're going to dive into forest mostly. But actually, before we do that, before we dive, I think we're going to be postponing that now, because before we dive into forest mainly, there are some things we need to touch before we do that. So what we are basically going to touch today is talked about is base and quote currency, major, minor, exotics, leverage, pips, all these things are something you're going to be seeing on. In fact, without these things, you don't even, like, you're not doing anything, because you must know them. Like, these are what you're going to be working with. All this stuff is something you must know. Okay, so let's start with um, base and quote currency. But before we start that, what is actually a currency? Actually, currency is like your company, your country currencies. Like in Nigeria now, we use naira. So let's say foreign exchange now is actually the exchange of um, foreign currencies. For example, like we have here, actually, this is the current um, currency pairs I'm actually looking at the moment. That's the six pairs here. So when they talk about currencies, these are the exchange of two currencies of different countries. Maybe for example, Nigerian naira with a US dollar. As you can see, for like recently, naira has been dropping, appreciating, dropping. So um, exchanging of AUD against US dollar and so forth. So that's what we call currency. Sorry, foreign exchange. That's exchanging of foreign currencies. Now, what is currency? And when we talk of base currency, quote currencies, now this is what we basically mean here. You can see, or on this my watch list, you can see we have USD CHF AUD card. That's AUD CAD, Euro USD, GBP USD, like six of them here. Now, what they mean by base currency is actually we have USD CHF here, right? Now you can see the first three alphabet is USD, that's US dollar. Now the first currency is always the base currency, while the second currency is the quote currency. Now before we type, if you notice, actually currency pairs are actually being represented by three alphabets. Okay, for example, you don't need to start learning about their full name before you trade those currencies. So that's why they are being abbreviated. So we have USD. This USD now is representing United States dollar, while CHF is Swiss francs, that's the money they spend. We have AUD card. The AUD is representing Australian dollar, while this CAD is representing Canadian dollar. The same thing here, euro against US dollar. This one, Great Britain pounds. That's a British pounds against US dollar. Same thing here, British pound against Japanese yen. That's JPY. This is a metal, SAU, which means gold against US dollar. So the first currency you see here, the first one you see, the first three digits, it represents the base currency, while the other one is quote currency. So what do we mean by base and quote currency? Now, base currency are what you're actually dealing with here. Now let's say, okay, let me put it this way. The base currency is what we are trading against the other one. What do I mean by that? Now, for example, taking Euro USD for example, we have Euro. Euro is the base currency here. USD is the quote currency. Now, what I mean by that is we are buying or selling Euro USD using. I'm sorry, we are buying or selling Euro using US dollar. Now, what I mean by that is means once you say Euro USD means we are buying or selling this with this. That means we are buying Euro or selling Euro. That's when we are buying Euro with US dollar. When we are selling to receive, like we are selling Euro to receive US dollar. Don't know if you get my point here. So now, oh sorry, now the quote currency is what they use in quoting the base currency. Now what I mean by that is euro, like for example we want to buy 1 euro. Now it means that 1 euro is $1.0938. That's 1.0993 US dollar if we are buying 1 euro currently at this current market price. Okay, so the same thing here, £1 is equals to 1.2857 US dollar. So what I mean by that is that the base currency is being traded against the quote currency. So the base currency is the current price of the base currency is being quoted with the quote currency. So this Japanese yen is actually trading at £1 is equals to 189 Japanese yen. I don't know if you're getting my point here. So that's what you need to know about base and quote currency. Just have it in mind that the first three, okay, let me say the first currency is the base currency, while the second currency is the quote currency. So like here, USD is the base currency here, while CHF is the quote currency. AUD is the base currency. CAD is the quote currency. Same thing here. Euro, pounds, gold. They are all base currency here. Why CHF, CAD, USD, JPY, USD. They are the base quote currency here. So let's proceed. Now proceeding, now we have major, minor, exotic pairs. Okay, so if you check currency pairs are actually grouped into three. That's the major currency pairs, the minor currency pairs, and the exotic pairs. Now the exotic pairs I don't actually trade them. Okay, now firstly before let's go into the main thing. That's let's start from the major currency pairs. Okay, now on top of the major currency pairs, we're talking about those currency pairs that have USD in them, like they are the most traded currency. I think the most traded major currency pairs we have right now is there are actually 7. We have the Euro USD, the Pounds USD, AUD USD, USD CAD, USD CAD, USD JPY, USD JPY, and I think NZD USD. Alright, okay, so these are the most traded currency pairs right now. 1 2 3 4 5 1 2 3 4 5 6. No, we are still remaining one. Euro USD, Pounds USD, AUD, USD CAD, okay, USD CHF. Alright, so these are the most traded currency pairs. There are 7, the most traded currency pairs. Now major currency pairs, there are those currency pairs that have US dollar in them. That's USD in them. You can see all these currency pairs I named here. They actually they all have USD, Euro USD, Pounds USD, AUD USD, USD CAD. USD, JPY, SND, USD. Now, if you can see here now, we have some currency that USD is actually the base currency, while CAD is like they have quote currency. Now imagine, okay, let's say here now one USD is equals to 1.3486 Canadian dollar. So if we are buying one USD with Canadian dollar right now, we'll be buying it at the rate of 1.3486, and if you are selling, means as you are selling USD, we'll be receiving 1.3486 Canadian dollar. So USD here now in this case is the base currency, while CAD is the quote currency. Okay, now we already finished talking about that. Now major currency pairs are those currency pairs that have USD in them. Okay, they are the one that have, and they are the most liquid currency because they are most traded. Like people trade them a lot, so they have a lot of liquidity, they have a lot of money in them. So, and if you check this, and they have the lowest price of compared to other currency pairs. And what I mean by spread is the bid and ask price between you, your broker, and the forex market. I don't know if I didn't talk about that in my previous video. Let me just try and explain it now. Now when they talk about bid and ask price, or spread, okay, let me put it, when they talk about spread simply means let me put it in a layman way. That's let's say for example, you trade in the forex market, and you can't actually trade directly from the forex market, so you need a medium, that's a broker, which is the medium you're trading through to connect to the forex market. Normally the raw price on the forex market, now let's say for example the raw price from the forex market is actually $1, but your broker is actually selling it for you at the rate of 1.0938. I don't know if I get my point. Okay, or let's put it this way. Currently the price in the raw market is 1.09328, but your broker is selling it for you at the rate of 1.0938. Means they are selling it with 10 pips. Don't worry, don't know what that is. We're going to talk about that. Like that's they had, okay, let's say you are buying it, the price from the raw market is $1. We are getting it at the rate of $2 from your broker. So that little stuff there is called what we call spread. Okay, that's what we call spread, and that's where some brokers actually make money from. Okay, so these major currency pairs, they are the most liquid, and they have low spread, and So coming again, let me recap. Major currency pairs, they are those currency pairs that have USD in them. So now moving to minor pairs. Minor pairs are those pairs that they don't have USD in them, but they are actually paired with some popular currency. For example, let's say GBP, JPY. That's Japanese that's British pounds against Japanese yen. Now here now you notice that this pound is actually a popular currency, so that's why they call it minor pairs. Actually it's actually minor pairs or cross pairs. Okay, so those cross pairs or minor pairs, they are those currency pairs that are being paired with popular currencies, but not USD. Once it's being paired with USD, it's actually falling into the categories of major pairs. Okay, so we have euro odd AEURAUD. That's euro versus Australian dollar. We have AUD CHF. AUD is actually popular. Euro is popular. Euro HOD, Euro AUD. Okay, I have it here already. Euro SND, ZT. Like a lot of them, like we have them plenty. Like there are so much. There are many. We have pounds USD, pounds odd, AUD card. Like there are many. So all those currency pairs are those currency pairs that doesn't have USD in them, but they are paired with popular currency pairs. Okay, so those are cross pairs. They are cross pairs and they are cross pairs. Those are cross pairs. Sorry, like I think let me not just say that thing I want to say. So these are cross pairs. They don't have USD in them, but they are being paired with popular currency. So when we talk of exotic pairs, I don't just trade those ones because these are currency pairs that they are being traded with like should I say unpopular currency pairs. For example, now just like I'm trading Nigerian naira against US dollar, that kind of a thing. So those ones like I don't actually trade those stuffs. So the stuff I trade mostly is major pairs, minor pairs. Then we can talk of metals. When we talk of metals or cryptos, there's gold, silver, a lot of them. So as you come into this thing, you're going to get to understand them better. Okay. So now let's talk about leverage. Now talking about leverage, actually, there is something we call 1:1000, 1:200, 1:500, 1:200, 1:2000. These are actually leverage. Now, what we mean by leverage is that now, if you notice that the forex price, the market, the currency pairs price, the currency pairs, they actually move like the movement is in fact if it's appreciating or depreciating is is significant. Like they are very the movement is very significant. They are very little. For example, now if um if a currency move from $1 to 1.01, as you can see, they are very significant. Like the movement is the appreciation is small, like it's plus or minus 0.1. So their movement is very small. Now imagine a situation whereby you want to trade that kind of a thing. You need to buy it like, let's say you buy a US dollar now at the rate of $1 and it appreciates to 0.1. You now sell it. Now if you are selling it, what you are the profit you are making is $0.1, which is very small. So for you to make enough profit, you will have to buy at least, maybe selling at $1, you are buying like $2 million. 1, 2, 3, 4, 5, 6. $2 million worth. That now if it appreciates by 0.1%, that is $0.1, you're making profit of times $0.1, you're making profit of $200. Are you seeing it? So now for you to make profit of $200 now, when it moves by $0.1 appreciation or depreciation, you will need to at least buy 2 million worth of that particular dollar, 2 million worth. So the question here now is, where will you get that 200 million $2 million to buy that large quantity of stock to give you that kind of profit? You don't have it. So that's where the leverage comes in. Now when they talk of 1:100, it means that for every $1 in your account, in your life in trading account, for every $1 in your trading account, you can actually place a trade of $100. Do you get my point? Now let's say 1 is to 1000. It means if I have $50 in my account, in my trading account, and my leverage is 1 is to 1 ratio 1000, means I can actually take a trade worth, that's 50 times 1000, that's $50,000 worth, that's $50,000 units of 50,000 units of dollars. Okay, that's, I can actually trade up to 50,000 units, whereas I have just $50 in my account. So for every $1 I have, I can actually take a trade of 1000. For every $1 means I can control something of 1000. That's the leverage. That's what the leverage does. So if I'm having like $5 in my account, means I can take trade of 5,000 watts trade. I don't know if you're getting my point here. So the leverage is just like you're borrowing money from the broker to trade that large amount of currencies that you need to trade to make those profit. Okay, so that's what leveraging means. For those that are already in the system, they will understand this better. But you that you are new to it, I think the way I explain it, and you're supposed to get my point here. So leverage, some brokers offer 1 is to 50, 1 is to 200, 1 is to 1000, 1 is to 2000, depending. And don't forget, the higher the leverage, the higher the risk. In fact, the higher the risk, the higher the profit, the higher the loss. Okay, so just have that in mind. All right, so that's all about leverage. So the next thing is pips. When we're talking about pips, pips is actually acronym for I think percentage interest point, kind of. Now when you talk of pips, pips is the smallest move of a currency pair. Now what I mean by a currency pair, now let's take euro SND for example now. And before I okay, let me open the chart. Before we proceed now, if you can see here, these are the prices of the market. This is how the market moves. As you can see, we have 1.77. Currently the price is that, market is closed now, that's why the market is not moving. So today we are still in weekend, but it's going to open in the next 1 hour. Now we have 1.771 here, that's the current price. Now don't forget that market pips is actually calculated from the fourth number. For example, here we have 1.7710. That's where we take the reading from. Okay, now let's say the market move from 1.7710 to 1.7720, means the market moves in 10 pips. Okay, let's use our calculator. 1.7710 minus 1.7720, that's what am I saying, 0.001, sorry, 1 2 3 4. Okay, it moves by 10 pips up. It moves by 10 pips up because it's supposed to be, that's the last 4, this is 1 2 3 4. So it moves 10 pips above. That's 1.77101, sorry, 1.7711, that's 1 pips. 1.7712 till it reach 1.7720. So from here, let me use my tools for you to understand what I'm saying. Let's say the market move from here to this point. Okay, let me use my measuring tools. I think that will be better. You will understand it better. And let's say the market move from 1.7 70. Okay, seven, sorry, let me, so that we can get the price we're looking for. 1.7710 to 1.2, sorry, 1.772, right? 1.77220. 1.7720. You can see what I'm saying. It moves by 10 pips. See it here. It moves by 10. It moves by 10 pips. See this thing here. So pips is actually the smallest move of market price. So if market is moving maybe from 1.771 to like 1.773, so that should be like how many pips? Appreciation 0 oh sorry, let me do that again. Measure 1.7710, right? From here 1.7710. Oh sorry, this 101, but let's leave it there to around 3. So like that's like 20 pips move. So that's we have that's the percentage move. So the price is moving, like they're moving in very small significant number, like their movement is very small, so that's why you need to buy them in large quantity, so that that small moves, when you multiply it in that large quantity you're buying them, then you make so much money from it. So that's where those leveraging comes in. Okay, hope you guys are trying, just as I'm saying all this and explaining it, just try to be linking them together. So that's what we mean by pips. So pips is the smallest change of currency pairs, like from the current price, maybe it moves 10 pips up or 10 pips down. Okay, so it's the smallest. Okay, let's check Google. What is Google telling us about pips? Pips pips. Okay, you can see here, a pips is an acronym for percentage in points or price interest point. So it's a tool of measuring related to the smallest price movements made by any exchange rate. Okay, so and currency are usually quoted to 4 decimal places, which is what I'm trying to explain to you guys. So I think the markets have opened on this particular currency. The market just opened now, as you can see the move. So what am I saying? It moves from 1.7710 to 1.77201 as market open. So that's a 10 pips move. Hope you are getting. Just try to relate this thing. As you can see, we are just explaining and the market opens. So if it drops below, you count it like in 4 decimal places. That's from 1.7716. That's 4 decimal places. So you can't move up or down. So from there you know the pip. That's how the number of pips it moves up or it moves down, which is what you use in calculating your profit. As we proceed further, you understand all these things I'm trying to explain. So what again? Pips value is your money. Okay, so when we talk about pips value, this is another calculation which we actually need to tackle. Now when we're talking about pips value, there's a way pips value is being calculated. I don't know if I will be able to explain it here without a proper calculation. Okay, but I will give you guys insights of what that is, because I'm not prepared for calculation right now. Okay, so pips value is for example, your pips value is actually determined by your lot size. I think I explained what lot size is before. Okay, let me take it again. We have one standard lot size. Now, one standard lot size is actually means one is 100,000 units. Okay, so if I said, if I told you that I'm buying sorry, I'm buying Euro USD, I'm buying Euro USD one lot size, it means I'm buying Euro USD in 100,000 units. Okay, so 100,000 units. Now we have one lot size, we have micro lot size. That micro lot size is 10,000 units. Okay, we have um sorry, we have one standard lot size which is 100,000 units. We have one mini lot size which is 10,000 units. Then um we have micro lot size which is 1,000 units. Okay, so taking it from the micro, I'm sorry, the standard, the one standard lot size. Now one standard lot size means um anything I'm buying which I'm using one standard lot size means I'm buying 100,000 units worth of that currency I'm buying. Okay, and pips value, that's, I made mention of pips in this chart here. I said this thing move 10 pips up. Now each one pips, the price of the market move maybe up or down, how much is it going to be giving me depends solely on my lot size. So for example, on Euro USD, let me make you Euro USD as an example. On Euro USD, let's say I'm buying one standard lot size on this particular trade now, and the market already moved how many pips from my entry. It moves from here to is here currently, so that's 65 pips. Now assuming when I'm taking this trade I use one standard lot size, which means I'm buying 100,000 units of this. Now each one pips move will be giving me $10. So imagine when the market already moved 65 pips up, means my profit currently will be $650. I don't know if you guys are getting my point here. To be $650. So that's for one standard lot size. Now the pips value of I'm making Euro USD. Don't forget that each currency pairs differs. Okay, so but most of these major currencies is what I'm telling you. So one standard lot size will give you $10 per one pips move. Okay, why mini lot size, which is 10,000 units, will give you $1 per one pips move. Now what I mean by that is for example, now this market move from my entry to here, which is around $65 and 65 pips, 65 pips. I checked it just now, 65 pips. Now that 55 pips now means I'll be making profit of $65 currently, which means one pips move is equals to $1. Okay, now talking about one micro lot size, which is 1,000 units, means if I enter this trade with that now currently, means I'll be making one pips move of one micro lot size is $0.1 per one pips. So times 65 means I'll be making $6.5. So you see that the the your the lot size you are using actually determine your your profit and also your pips value. So the higher the lot size means you are risking more and you are making more profit, and if it goes the other way around you are making more loss. So forex trading is actually like a two-edged sword. It goes this way, you make money; it goes the other way, you lose money. That's why we have risk management, so that it keep you afloat in the industry, because you can't be 100% accurate. Okay, so I think that's all we have now. I've talked about pips value. I think the pips and the the pips value of a thing, the main calculation there, we're going to be talking about it later on. Okay, so the our next video that I'm going to be dropping now, we're going to be talking about chart patterns. Okay, because I'm a swing trader and I only teach you what I'm trading. Okay, if you can see, if you can see my chart now, I'm a swing trader. See, this is the trader I took. Let's start from this first one. I think I took this trade. I took the first one. It's SL. As you can see, like I used the first trade, which is this one, and took the second one, which is still currently going on and is still in profit. As you can see here, and this is my target is to here AUD card. I think my last my last three trade on this currency pair has been TP, and been making money there. One, another one here, another one here too, and this is the third one. And I'm looking to take another trade here if I can see a good entry reasons, and I will take it a buy to here. Euro USD. As you can see, I'm on this trade. Actually, I missed the first trade from here. I would have taken this trade from here to here, but I missed that first entry, so I took the my second entry, which is going to be to here. And pounds USD, I'm waiting for entry on this one. I don't have any entry there. Why this one? I think my last three trade on this particular currency has been awesome too. Also, as you can see it, I take this one, took this one. So I'm a swing trader. So, and we'll talk of swinging. I actually take my entries based on chart patterns. So in my next video, I'll be dropping I'll be talking about chart patterns, like don't worry, I don't want to leak it here. I don't want to leak my next stuff there. But we'll be talking about, like, we are actually diving into, I told you that we're going to be diving into forex free, so which we already started now. So make sure you watch the video and digest all this in I mentioned here, the base, the this. So when you know all these stuffs, then next video we're going to be talking about chart pattern, because I need to be taking it a bit by bit so that you can actually assimilate everything, because you're going to be working with all these things. Okay, so we're talking about chart pattern before we start talking about structure, how to map out your structure, then wait for confluence of those things that they teach you, like the chart patterns. Where is it happening? Is happening on my structure or my key level? I take a trade to the next level. So that's how I take my trade. Now the strategy I'm trying to teach, I'm teaching you guys actually pure price action. Like when we talk about price action, it means that trading without using any indicator. Indicators, for those that have been into forex market already, they know what I'm saying, you know what I'm talking about. Why you that is still a newbie, you will know very soon what I mean by that. So very clean chart, you don't need indicators. What I just need is my technical tools, draw my charts, analyze it, and take my trade. So I'm actually a price action trader, and those that are interested in learning my strategy, you are in the right place. So I'll be teaching you guys that. So next thing is we're going to be talking about price action, chart patterns, candlestick patterns. All those things are what you need to know. So I'll drop those ones in my next video. Okay, I think we are done for the day. The market's already open, so let me go and check my trades and how it's going. So see you guys in the next video, and don't forget, um for those that have not followed me on my social media accounts, make sure you do that. Okay, um see you guys in my next video. Thank you very much.